You know, you've got to play a game to try and guess the top based on the volume and based on the flow and based on the news, and then compare all of that stuff as if you put it in brackets, and then compare it to the formula of what it did last time. And think based on the differences, what should the top be? And I said to some guy, I think it'll be around 3. Says this thing would go to 3. I said it in the challenge chat. So I think this will go to 3, but of course I said it would go to 3, and I started shortening the 260s, which is a different story.
Welcome back, everyone, to the SteadyTrade podcast. Today is kind of, I would call it like the Seinfeld episode of SteadyTrade. It's a podcast about nothing. But all joking aside, we're celebrating episode 150. If you would have asked me 3.5 years ago, I would have said Steven probably would have been, drank himself to death by episode 150. But he's still here.
No,
the best trader he's been since the beginning of the podcast. He's crushing it lately. Things are going well for him because he kept grinding. He's here 150 episodes later. He's still trading 3.5 years later. We've brought on a new partner with Kim. We've grown. So thank you, everyone. We get emails from a lot of you that say you listen to every episode or listen to every episode twice. So it's pretty cool that we're still here 150 episodes later, 3-ish years later. I mean, we do one episode a week, so roughly 3 years I think we are at. And I would like to thank you as well as thank Kim and Steven. I think I have a ball doing these episodes, and we're just going to kind of talk about whatever. Steven had a recent interesting trade that tortured him, and he resulted to arguing with anonymous eggs on Twitter, which is the first stage of Dante's 7 levels of hell.
Exactly.
You start arguing with eggs on Twitter. Next thing you know, you're on the 7th level. But anyway, welcome back, everyone. Welcome, Kim. Welcome, Steven. So
it's good to be here. Steven, they didn't even have profile pictures.
Right.
They didn't even have. They just had an egg for their profile picture.
No, they didn't. Tim, same.
Oh, okay.
They had 0 followers. 0.
No.
They were following they've never had 0 tweets. An egg. They're following one person. They're following Trump, and he's arguing with them.
They're bots. They're Russian bots. What are you? They're not even real people.
No, they are real. They are real. And this feud started with these people. This feud started maybe 2 years ago or 3 years ago when I took my first 5-figure loss. And Tim will remember this because we did a podcast on it. Where, do you remember? I swung a cancer stock over the weekend. I swung a cancer stock up on Cancer News over the weekend. And then it just screamed through the 2s and 3s. Tim, if you can remember the ticker, you're a better man than I am.
Ooh, I like to,
do you remember the conversation?
I remember the conversation, but I like to always think I got a pretty good memory for tickers, but it's escaping me. It wasn't OPK. OPK, was it? It doesn't matter. It doesn't matter. So anyway.
But anyway, a couple of years ago, I shorted maybe a lowish float, very high volume. It was a breakout stock. Gapped up and just kept on going. I swung it over the weekend, holding and hoping. And then and all over the weekend, I was watching Twitter, and I was watching, you type in the dollar symbol in the ticker, and I was just watching all of these people saying about how all of this company was the next big thing, and how even if it went down, they were going to dip by it more, and how it was in the 3s, but it was going to go to the 20s. And I started hating these people because they were lying just to manipulate.
I think it was OPK in 2018. But anyway, go ahead.
It was 2018, maybe February 2018 or something like that. I can't remember properly. But now that I've learned how to trade properly and I'm on the profitable side of the coin and these degenerates are on the losing side of the coin, I was just like, I'm going to push this back in your faces. And I read the idiotic comments. Oh, down 40%, dip buy, just going to double down, going higher tomorrow. And it just drives us mental with the insanity of some of these people. Like when they start getting a better grasp of what's going on. And Envis could have gone today. It could have. No one really knows.
It did gap up quite a bit. Yeah, yep. It gapped up. I mean, it gapped up to over 150s. So.
But when the shorts, because them short sellers, they've got millions and millions of dollars. A lot of them. When those short sellers start smelling blood, and they go in with their accounts, it's just over.
So the reason I picked on you was for two reasons. Number one, you said it. You said arguing with these people drives you insane. So number one, for your own mental health, why do it? And then number two, as I joke about, politics online, you realize you're never going to change their mind, right? Mm. Just like politics, no. like if you're on Facebook, it drives me nuts, all these people that argue about politics on Facebook, because you're not changing anyone's mind. And all you're doing is whipping yourself up into a frothing rage. And if you voted whatever you voted last time, you're not flipping to the other side because of some rage on Facebook. No. Uncle Joe finally convinced me. I'm now a Republican. I'm now a Democrat. So that's why I like to pick on you, Stephen. So
no, it's all good, but on the whole, trading's been good. But I think trading's been good for everyone. I'm like, oh, look at me, I'm doing well. But honestly, I think I'm a bit scared to get out of these hot months because I think everyone's doing good.
It's an interesting market, and I've talked about that. I mean, we're busy as heck at StocksToTrade. I mean, it's like, it's just, I think that number one, you're just seeing this repetition of these virus plays. I mean, you see it every day. It's just, listen, I don't want to oversimplify things, but it's like, if you see a low float stock with an 8 a.m. press release and it's trading crazy volume in pre-market, you got some pretty good odds there. And then for a guy like you on the short side, just wait a couple days because they all fade back, so it's like there's great opportunities on the front side and the back side. And what I love about now is these swing trades. There's so many swing trades right now that just make sense. It's like Peloton or Blue Apron or a lot of these stocks, it's like food delivery, home exercise, Zoom. Zoom got crushed by Facebook, but Zoom was an incredible swing trade. It just makes sense. We use Zoom every day,
Exactly.
So.
Exactly.
No, but I think when you're in different times, when times change, so this virus, there's a lot of offshooting implications, and there's a lot of change. And when there's a lot of change, things go up and down. And when things go up and down, you can start going long and you can start going short, swinging, because trends start occurring. It's like when you throw the stone in the water and the ripples come out. It's just the same thing.
Are you going long too, Stephen?
Yeah, I've done quite well. Longs make a lot of sense. It took us 2 years of sitting in Tim Bowen's room, but I'm finally starting to get it. Longs make sense. I'm making money long. I don't lose very much long, maybe 30% of the time, because I only ever trade the best ones. I'm not good enough at long and to trace subpar longs. I only trade the very best because I'm not that good at them. Whereas with short, I can trade stupid setups and still get away with it. What the hell did I trade today? XRF. That was a stupid short. But we've got Kim on. Go on.
Yeah. So XRF. And here's the thing.
Stupid, wasn't it?
Well, listen. I don't think it was.
Not if you cut it.
I don't think it was a stupid short. It's probably going to give the entire move back. It's just, this is where, and I'm just looking out, again, I'm looking out for the little guy that doesn't understand this stuff. When you short these things early, it could get ugly really fast. And XRF, listen, you were on the webinar. I'm like, this is some sketchy Chinese company that's doing some share exchange with a company in the British Virgin Islands. It doesn't get any sketchier than this. But it had traded like 15 million shares in pre-market, and that's got to be your red flag. Now, if you would have waited, I'm looking at it right now. It fails VWAP at 10 a.m. and it's $1 a share lower right now. So if you can
I'm
wait,
still in it. I'm in it. I shorted it, and then I cut it because it went mental and it broke the higher day, and I'm like, I'm out. And then when I got that lower high and it didn't break through, I got back in, and I've been in it ever since. I mean, I'm only up about $300 because I lost $300 on the wheel, but then I made that 300 back plus another 300. So it all worked out. But sorry for swearing. It's not easy. I just thought to myself, I'm not shorting these again. I'm not shorting this again.
You know we've moved to another level when we're apologizing for cursing.
That was the first rule that we got told when we were on the podcast. There was no profanity.
Well,
really?
It was never no profanity. It was just no F-bombs. It was kind of yep. So I don't think management has any problem with some shits and some dams. It's just the F-bombs. Yeah. So.
But
so do you guys both think how encouraging would you be to a real beginner to come into this? So you'd be like 100%, you're a beginner. This is the perfect place to come in and learn.
My opinion is, yeah. especially if you want to be a day trader, day or swing trader, a short-term trader, I've never seen, it's just 15 years I've been doing this. I've never seen something like this. And what's great about now it's a double-edged sword. But like today we had an earnings winner, MGNX, and I did an Instagram live, and everyone was like, oh, on the Instagram live, they're like, oh, we missed it. It's $4 a share higher 45 minutes later. It's a $20 stock, but it's just like, these moves are so much, they're longer, they multiple days, and there's so many plays right now. And I just, I use this bus station analogy all the time. It's like, if you missed one, wait an hour, wait a day. There's another, MGNX earnings winner, 52-week breakout, crazy volume. It's traded 40 million shares. Normally it trades 600,000 a day, and they just happen over and over again. And I always talk about the dark days. Like, I remember the dark days of like 2012 to like 2015, and we would go days, weeks waiting for 100% runner. Wow. These days you get 401% runners a day. So Stephen, you answer, but I say I've never seen a time like this.
It's. I'll never forget when I first started around. So that was like 3.5 years ago, which is 2020, 2019, 2018, 2017. So summer of 2016, I started, and that year was crackers. Yep. That year was crackers, and it was only
that's when it all like late 2015 is when it all started. Yeah.
So 2016 it was booming, and I'm sure 2016, 2017 you had like the likes of DRYS going from 4 to 120, and then you had you just had so many different rushes of Bitcoin.
Yep, Bitcoin. We had a weed stock run again.
Wow.
It's I can tell you a ton of tickers just thought like THMO was a crazy runner. CLSK was the perfect short into a parabolic 3 times yesterday.
I'll always remember the very first. So I've done over 2,000 webinars in StocksToTrade Pro. I'll always remember the very first one, because it would have been, let me see the day. It was 2016. It was July 2016, and I'm trying to see it, but TCCO ran 1,000% on my very first STT Pro webinar. It ran 1,000% by 10 a.m. And I'm just like, and I'm doing this webinar, and I'm telling people, I'm like, it didn't used to be like this. That was 4.5 years ago.
And that's not a reverse split, eh? It's not a reverse split. It literally ran 1,000%.
Yep.
Is that a weapon in your hand, Tim?
No, it's my selfie stick.
Oh, okay. I'm just joking. It looked like one of those batons.
Well, if Steven was here, I'd beat him with it. But no, it's
not anymore. I'm good. I haven't drank in 6 days. I'm sober.
Wow.
This is what I use for Instagram Live. But anyway, sorry.
I'm making money. I'm in STT Pro. I'm doing everything right.
So when was the last time you drank?
6 days ago.
Okay. I thought you said like 60. So
I'm gonna get really drunk tomorrow. It's the weekend.
Okay, but, so you're just limiting it to the weekend.
Oh, for this month, because I put a bit of weight on, and I was just like, and I wanted to see how it was with trading as well. I wanted to see if it helps, and it does.
Yeah.
When you get yourself in sticky situations, it's easier to stay focused and get the money back by not being too emotional and thinking, right, you've covered that dip, let it pop back up, and it will pop. Don't get emotionally involved and jump back in thinking I might miss the move. Helps you control some of your psychology. Yeah. But Kim, I thought it was more than 150 episodes. It must have been 100. That's like 130 of us losing and 20 of us winning. But then Kim, you've probably come on the last 30 of them. 20, 30?
It would have been like late summer, so probably. Yeah. I mean, we're probably kind of coming up on a year, so I'm guessing 30 or so. Yeah. Yep.
Yeah. Yep.
How's your experience? What have you learned and what have you enjoyed? And
well, yesterday.
What was your best episode?
What'd you say?
I'll ask this to all of you. What's your best episode so far, Kim? And what's your best episode and interview, Tim, as well?
Who goes first? You go first, Tim.
I'll go first. All right. My best episode, I think, is the first episode where you guys interviewed me. That was episode 100.
Oh, I didn't realize that. I didn't realize it's a whole $1, $50.
Yeah, that is.
It was a breakout. We broke out over one.
It was just, I think you guys both were so, I just felt really safe with both of you, and I felt really comfortable, and I felt like
that's because Steven was on the other side of the world. If he was in the same room with you, you wouldn't feel that.
I just felt like you both got me, and I could be myself and authentic, and you were interested in what I had to say. It just felt like we had known each other for a lot longer than having just met. So that's my favorite episode.
I would have to say my favorite, and my apologies to both of you, but my favorite would still be, my favorite is still just Jim Rogers. Mainly because, I'd looked up to that guy for probably 20 plus years. So, and read his books, considered him like a, oh shoot. Who wrote Think and
Napoleon Hill.
Napoleon Hill talked about having that virtual, advisors, whether, because it's like you got your books, you got all these people that are influencing your thinking. And Jim Rogers was always one of those guys to me. Again, read it. Street Smarts. Love that book. Street Smarts really talks about the way he thinks. And then, he didn't know who I was, never heard of our podcast, and was maybe, and this is no offense to any of our other guests, might have been the nicest guy we've ever had. Dude's worth almost $1 billion. He's on the other side of the world, has no idea who we are, and was just like the nicest guy in the world. So I would have to say that's still my favorite. Again, just because he was that virtual mentor of mine and was just so nice, man. Great guy.
It's awesome. He's so, I got to interview him for my book in person. And ever since then, he wishes me a happy birthday every year on my birthday. And, when I reached out to him about you guys, I was like, they're good guys. And I think, honestly, that's his measuring stick. His measuring stick is like, he really wants to be a contribution to people who are authentic, real, and making a difference. He has a big heart. He really does, besides a big brain and wisdom.
So Steven, you got to go. What's your favorite episode?
I've had a couple where I actually really was surprised at how much I enjoyed them. The interview with Roland, we had Roland on a couple of times in the early days, and I was still really learning what I was doing. And I'll never forget when I went to Italy and I went to Positano to meet Tim Sykes on the Market Mastery. And I arrived in Italy, and I've got anxiety problems anyway. And then I arrived in Italy on my own, not knowing anyone, not really knowing who the real Tim Sykes was. It's just the guy who I've seen on the videos. And then there's all of these different people. everywhere. Everyone knows each other, but I didn't know anyone. And then all of a sudden, little Roland Wolf came out of nowhere, and I'd never met him before. And I was like, "You're that Roland Wolf kid who made 300,000 in 6 months." And he's like, "Oh, you're the guy off YouTube. I've seen your videos." And then ever since then, we had a trading friendship. So any time I can catch up with him, and the way he explains things resonated so well. So his was really, 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 really good. But there was a few others that were quite inspiring. The guy who does all of the mechanics stuff, he does a lot of I can't remember the name of it. He works with Sykes as well. Not good. Not Michael Good. Not
mechanics stuff or systems-based trading.
Systems-based trading.
Matty Owens.
Matty Owens.
Triforce Trade.
Triforce Trade. I was like, I don't know anything about this stuff at all. But I left quite inspired by him.
That kid.
I was quite inspired.
That kid's freaking. I mean, again, go back in the. If you're curious, check out Matt Owens, Triforce Trader. Yeah, he's next level smart, man. He's not a caveman like me. I'm just like, price action, volume candles, VWAP. I'm just a caveman next to him. So,
but I mean, but if you're a caveman, I don't know what I am. But honestly, you don't have to be clever to trade. If anything, it's to your advantage if you're not clever. Honestly, it's to your advantage to not be clever because it's dead simple when you get down to it.
Now again, if you're Matt Owens, I mean, crazy smart. That's programmer, he's a coder kind of guy and stuff. That's great. But what I think, Stephen, and I totally agree, I think average Joes like you and I sometimes way overcomplicate things, and that's where they run into trouble. I mean, I think, and especially what we talk about here is, I beg everyone just to trade part-time, as a side hustle. I mean, what'd you make last month? 10 grand? Yeah. Look at him.
10 and a bit, yeah. Just over.
Only 10 grand.
I know.
Trading part-time. Only 10 grand. Meanwhile, there's people, I'm picking on you. Meanwhile, there's people out there like, 10 grand? I made 10 grand last year.
Exactly.
So anyway, I think especially as that side hustle we talk about all the time, just keep it simple. And look what Steven did. I mean, he's not working as much because of the quarantine.
You are?
Oh, I didn't know.
I am.
Okay.
No, my boss is not letting me off anything.
Okay.
It's Ramadan now. It's Ramadan now, so I'm working a few less hours a day now. But
so let me finish, and then I know I'm the king of butting in, but I want that to sink into the listener.
Yeah.
Okay.
Yeah.
Steven is trading 12 hours out of the Eastern time zone, or 9 hours, whatever it is. He's the other side of the world. He's got a full-time job, and he's just doing simple support and resistance stuff. Simple stuff that Tim Sykes teaches, I teaches it too. There's my caveman coming out.
That's a caveman.
It's just simple things.
Yeah.
And I want to sink in. He made 10 grand part-time last month, supplementing his income. He's got a good job.
It's impressive.
What could you do? You listener out there. I mean, hey, I'm hoping you got a good job. I mean, I know most of you might be home right now, but hopefully you'll be going back to that job. If you got a job with benefits, healthcare, a retirement plan, and then you can make 10 grand trading junk stocks part-time, that can make a real difference, man. So
make a huge difference. Huge difference.
And just to say how simple things are, I went through every phase in the book of like watching videos religiously, watching DVDs religiously, watching webinars religiously, asking people questions quite a lot, tracking Excel religiously. And you know what I found out was the best way to do it? Just whatever the stock's doing on the day, just look at what it did the last time it was doing something similar. And that's the strategy. If a stock gaps up with a certain amount of volume, what did it do the last time it gapped up with that volume? And if it did it enough times in the past, it'll do it again in the future. And if a stock is breaking out on its first green day, you think, well, what did it do the last time it broke out on its first green day of the channel? And you just do the same as what it did last time. And 90% of the time it works because everyone else is doing the same thing and it becomes a self-fulfilling prophecy. And that is trading, and it's that simple.
What's my quote? What am I going to say?
History doesn't repeat, but it rhymes.
and I love it. And it's like, and again, it's like these stocks, especially, you know, and that's why we love these penny stocks. They just do the same. You know, I mean, I'm trading stocks that I was trading 10 years ago.
Wow.
You know, because they do the same thing over and over and over again, you know.
How do they stay around for 10 years if they're
good question.
Junk?
Very, 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 very good question.
Well, because especially like Steven's setup, okay, Steven is, again, a short bias trader. I'm sure pretty much everybody knows that.
Mostly.
I mean, all of these, the way they stick around, Kim, is they know how to play the game, okay? You know, we mentioned, you know, the Bitcoin stock run, okay? One of my favorite stories of all time, Long Island iced tea, okay? Sky People fruit juice, okay?
I've seen a YouTube video about that.
There's a video on Sky People fruit juice on my personal YouTube from 2009, okay? You can look it up. I did my little impersonation of Will Smith and aliens, okay?
Okay.
Both fruit juice and Long Island iced tea, both those stocks pivoted to cryptocurrencies in 2017. Okay. What I'm getting at is these stocks know how to play the game. The game is you get in the hype, you get people excited, you run your stock up, and then you dilute like hell selling shares, you raise money, and then you buy the cocaine, you buy the hookers, you buy the jet, and you do it again in 2 years. That's what these stocks do. So,
and the stocks, the tickers stay the same, and people, is it because they're being put in front of people who think they see them for the first time and they're like, oh, this is new. Look, they're going to do it.
Kind of, yeah. But also, people don't know to read the history of the chart.
Yep.
But people don't know to look back 2 years on a chart, and it's so stupid. People who trade for whatever reason, 95% of traders who lose, or say not 95%, say 50% of traders who lose don't look back 2 years on a chart. They don't. They just think, look at what's happening now.
They must be new people, right? They're people that don't have any experience. They don't even know to look.
Yeah. I mean, people are just too zoomed in. I think that might be one of the best tips of today. You know, if you're, and again, you know, hey, I'm just offering advice, you know. I mean, if you're ever on one of my webinars, if you're on a YouTube live that I'm doing or whatever it is, watch. And if first time someone brings up a ticker, the very first thing I do is look at the multi-year chart. That's the first thing everyone should be doing. I mean, is that what you do, Steven? Like if I throw out a ticker, if I give you a ticker, what's the first thing you do?
The first thing I'll do is put it on a 2 year. If I'm being lazy, I'll put it on 6 or 8 months, but honestly 2 years.
But the first thing you do is look at a longer term chart.
Yeah, no, of course. The first thing I ever do, because obviously with stocks you've got to be quite quick. So the very first thing I'll do before anything is I'll check the long term, and based on the long term, I'll take a starter position just to get in, and then I'll check the news. I'll just look at if there's a 42415B or an S3. I'll not even read it. I'll just see, is there something going on there? And then I'll check the intraday. But I'll do it in that order. I'll check long term, then I'll check intra, then I'll put a bid in, and then I'll check the rest.
And I told you know, whatever that number is, you threw out 50%, but whatever the number is, it's crazy high. You know, of those newer traders, you know that are just that's not their first thing. You know, like Kim, to answer your question, why do these stocks keep tricking people? Because people are too zoomed in. They see some stock up 50% in pre-market, and they're like, and they get, and that FOMO. I mean, if there's one, like, you know, we all talk about this 90% that fail. I mean, if there was like one thing, it's FOMO. That's why so many people fail, because they don't look at the long-term chart, and they don't see that. They don't see that. Oh, 5 times in the last 4 years, this stock has spiked and closed on the low of the day. Like a doji candle. 5 times in 5 years, this thing's done a doji candle, but they still buy it. They still buy it because they don't look at that.
What's a doji candle?
So, did you not read Steve Neeson's Japanese Candlesticks like I told you?
No, I don't think you told me to read that one.
I'm sure Brian Shannon went over it, but anyway, I'll let y'all. So anyway,
Okay.
And if you're on YouTube, I'm doing it with the hands. But so when you've got a doji candle, a candlestick is based on the opening and the closing price. That's the body of the candle, and then the intraday are the wicks of the candle. So you've got a bottom wick and a top wick. So what a doji candle is that huge wick and then a puny body. Okay. So what that tells you right away is that stock spiked, ran, and then closed unchanged or very near unchanged. And so normally like one small bottom wick, a huge top wick, and then basically a flat body. Gravestone doji, a lot of times people call it. But what that tells you is when you see that on that daily chart multiple times in multiple years, you got to be like, whoa, do I want to buy this? Maybe I want to short it. So
yeah, no, it basically a doji candle is just an indecision candle. It doesn't know whether to go up or down, right?
Yep.
But one thing that I was thinking before, because I know, because I remember, it's so easy for us to laugh and joke and say this and say that about how simple this is and how simple that strategy is. But the reason that trading is so difficult yet so simple is because my theory on it is that your brain psychology is not hardwired to trade. So you need 2 to 3 years of exposure to this new environment where your brain is reacting completely different to how your brain and body is acting completely different to how you want it to, and you need to retrain it. And it takes a couple of years of exposure, and the more exposure, the faster you get it. And also dealing with size and sizing up is terrifying. The second theory that I've got of why people don't succeed is because your brain isn't used to making multiple calculations and building the case and managing multiple levels of variables all at the same time, while being under stress and panic of high emotion of the stock market. So you can't all at the same time being like, what's the long-term chart? How's it doing now? Where's the key daily support and resistance? And that intraday, that lower high, how's that really doing then? What's level 2? That bid looks quite high. And what was the news again? Is it still relevant if it breaks through this level? And the SEC filings, is that volume outweighing that dilution? You can't. It takes time. It takes years to manage all of the variables in your head in parallel at the same time. And that's why it's hard to get it. And that's why you make mistakes, because you forget key bits of information while trying to process the others to get the big picture.
Yeah.
So you're saying I can't buy a Lamborghini in like 4 days?
You can, because you're good at trading.
Well, I'm saying to the newbie out there. But Steven, I can't learn this in a month.
Nah, I saw a good quote the other day. I can't remember who said it, but they said it takes 12 years to be a doctor, takes 8 years to be a lawyer, takes 3 or 4 years to get a degree in anything else. But why do people think you can just make loads of money in trading in 1 or 2 years?
Well, and we talk about this a lot. It's one of the things that that bums me out is there's just zero barriers to entry. I mean, at the end of the day, unless you like forge your documents, the hospital's not going to let you operate on somebody without qualifications. And but you could, if you turn to 18 today, you got $500 to drop in a brokerage account. They'll give you 6. Hell, if you use some sketchy offshore broker, they'll give you 10-to-1 leverage. Here you go, buddy. Rip it up. So
what? So you said that the first thing you do is look at its history. Are there a couple other things that are like absolute have-tos right out of the gate?
Biggest thing I would say is, especially again, if you're day trading, you need to be aware of the float. You need to know, what is the float? What is the volume relative to the float, which is what we call float rotation. One of the reasons, and I'm not going to beat up Steven, but I think one of the reasons he got burnt early, now he got it back, But one of the reasons he got burnt early on XRF is that thing was churning the float. And when they're churning the float, you can't get stuck in front of that. And then I would say the last thing, out of like the key things is just, read the news. I joked about the news on XRF. I mean, if you're listening to this after the fact, it's May 6th. Look at that sketchy, weird press release on XRF on May 6th. So you got to be aware of the news. And now it takes time to interpret that, but, figure out, is this real? Or is it just BS? So we've got a ton of episodes talking about that. But
and just to add, like the what I've got much better at trading is when I've learned the nuances. So if you look at the daily chart on XRF, it fails every time, right? And the float's low. So it's basically a game of, you've got to look at the volume and look at the intraday chart and say, based on this float and this volume and this intraday chart, and based on how much it's spiked on volume in the past, how much do I think this will go pre-market up? You've got to play a game to try and guess the top based on the volume and based on the float and based on the news, and then compare all of that stuff as if you put it in brackets, and then compare it to the formula of what it did last time. And think, based on the differences, what should the top be? And I said to some guy, I think it'll be around 3. Says this thing would go to 3. I said it in the challenge chat. So I think this will go to 3, but of course I said it would go to 3, and I started shortening the 260s, which is a different story. But yeah, I mean, it's very. I mean, to you, I don't know if that makes sense. Does that make sense, Kim? Because I know to Tim it will probably resonate a bit. But does that make sense to you?
It makes sense a bit. I mean, I think there's still this integration that has to happen for me. However, because I'm hearing what you say all the time, there's just, the words become more familiar. So it's not, I don't have the context yet, but I get a sense that there is that nuance of, it's like a feeling. Like I can't help but compare it to my own experience with coaching, right? There's times in my training where they taught us, to do this specific style, that specific style, and they never wanted us to mix it up. And then in the last session of training, the 6th, training experience, they basically called it in the bones. And they said, all those like stay in your lane goes out the window now, because you have to have it in your bones and know you can zig and zag as need be. So they taught it to us so we would get the discipline. And then they were like, now all bets are off. You have to go into different lanes when you're coaching. And I hear what you guys are saying is kind of like that. You're like, learn this specific thing. And then after you learn all these specifics, you'll integrate them and it'll just be in your bones where you'll know to go left or right or.
It is. It's almost autopilot. I wouldn't say it was autopilot, but it's kind of almost autopilot. It's not like driving, because you're definitely thinking more, but it's kind of autopilot, I think.
Yeah.
Well, I actually, I think driving is a good analogy. I mean, it's like, we've all been there a million times where it's like, you get to where you're going, but you're like, well, geez, I don't remember what I passed on the way. Did I go by, were there people on the street? Was there busy you just don't remember these things, but you're high level functioning. I mean, you're operating an automobile, but you're ingrained with, a year, 2 years, 10 years, 20 years of driving experience. I mean, you're operating a 4,000 pound piece of machinery, but you've just got those skills. And, I think back to kind of what Stephen was saying too. It's like, and I always use the, putting in the reps type thing. It's like, you just can't, so many people think they can bench 300 today, in trading, and, oh, well, if I just like bench like crazy for 4 days, I can hit 300, and it just doesn't work that way,
Yeah.
So
I listened to our podcast that released yesterday, Stephen, that came out. And I listened to a lot of the, technical terms you used. And I finished it and I was like, I kind of got what he was talking about, which was like, it was just a good feeling. Like,
but you guys probably recorded that like a month ago or something.
Yeah,
right?
Exactly. Exactly. So yeah, it's just, after a while, I think it's just being around the language, around it's just like you said, it just starts to seep in, and then it just starts to make sense. And there's some technical stuff that maybe I don't technically understand, but I have a sense of the energy around it. Like, don't do this, look for that kind of thing, so that it just becomes more familiar. I think it's just the familiarity. You know, if you don't have that familiarity in the beginning, it's intimidating and overwhelming.
So what I'm going to do is I'm going to wrap this episode up, because I've got a meeting in 6 minutes. But I think that was a great ending, because, you know, I joked in the beginning about an episode about nothing, but I think that this is about, you know, we put in 3.5 years of this podcast. We've grown. The podcast is bigger than ever. I think we're doing better podcasts, and it's just like trading. And it's just like, you know, and that seems to be the theme today, is just, you know, show up every day. You know, what's the Woody Allen quote? 80% of success is showing up. And I think trading is that. And I commend Kim for a month later, now all these things are making sense. You know, I've got nothing but, you know, as much as I pick on Steven, got nothing but respect for that guy. I mean, every day. I mean, every day for 3.5 years, every podcast, except for I think 2 or 3 times he did show up drunk, and we had to reschedule, but only 2 out of 3. So, but I mean, other than that, every day. And, you know, whether you're learning trading, whether you're trying to bench 300, whatever you're trying to do, it's just like, just don't give up. Don't give up. And I always, I get a little.
First thing you said.
Yep. I always get a little melancholy, or I don't know if that's the right term, but a little sentimental, a little teary-eyed, because Steven always brings up that story. And I still remember when we met in person at the Orlando conference, and we kind of talked about his journey. And you know, I love you, brother, and I respect you more than anything for sticking around, showing up every day. And that's why you're where you're at, is because you've been here every day. And that's why the podcast is here. So,
and what people don't realize though is, like, once you start getting to the level where you can start making 5-10 grand a month, like, that's you for life. You're not going to just stop making 5 or 10 grand a month. That's you for life.
Yeah. And you don't have to make 10 million a year. I mean, listen, we all want to make 10 million a year, but again, there's no health insurance in day trading, my friends. Okay. There's no backup plan. Okay. You know, you might hate your day job, but at least hopefully, now I know layoffs and stuff like that happens, but you might hate your day job, but hopefully that day job's there tomorrow. You know, trading, you might go on a losing streak or whatever, but that, again, totally agree. I mean, if you can make 5-10 grand for the rest of your life with a job, with health insurance, with security, that's huge.
Crazy.
It's huge.
The best of both worlds.
2 properties, you're done.
That's right. It's the best of both worlds. It is.
All right, I got to run, everyone. Thank you, Kim. Thank you, Steven. I'm looking forward to the next 150 or the next 1,500. We got to get to work. Maybe we got to catch up with Rogan. I think he's at like 1,500. So
is it okay? We'll catch up with him.
So, all right. Thank you, everyone. Again, really thanks to all of you for sticking around for all of these episodes. Again, please keep sending us those emails. I love seeing the ones that people say I listen once or twice, or I've listened to every episode. We love doing these, and man, if we just, if we just help you just a little bit, that's our goal. So. As always, head over to SteadyTrade.com. You can drop us a comment. I don't know if we mentioned any links today, but if we did mention any links, they'll be in the show notes. Have a great day. Thank you, Kim. Thank you, Steven. And we'll see you the next time on the Steady Trade Podcast.